Welcome back. Now, subdued domestic demand, sluggish exports and ongoing logistical challenges continue to weigh on the manufacturing sector. The Absa PMI identifies this triple threat as key drivers behind the industry slipping back into negative territory, down 1.6 points to 49.2 in October, a wipeout of the September gains, which placed the sector on the brink of positive territory at 50.8. Joining us is Miyelani Maluleke, who's a senior economist at Absa, joining us with his assessment of the data and what it suggests about the sector moving forward. Miyelani, hi, good to have you with us on Business Day TV. What's happening? We've reversed. What's going on?
Yeah. Good afternoon, Ray. Really good to chat with you. Little bit disappointing, of course. We had a really good print in September above that 50-point magic level. We were starting to think, geez, it's been a pretty tough year. Lots of uncertainty, but we were seeming to have a manufacturing sector that was showing some resilience. So I think in the context of that, the October print certainly a little bit disappointing. What we're seeing, Ray, when we dig into the underlying data, there's quite a number of things that are coming through that manufacturers are telling us. One is that demand conditions are softening a little bit. And it's not just a domestic story, but it also seems to be an international story as well. And of course, I think people will be looking at that thinking, well, surely that must be the tariffs. Possibly. But the other thing that we need to think about here is the rand, right? A stronger rand will always make us a little bit less competitive in the international market. So I think that's kind of playing out into that as well. Infrastructure, I think we talk about all the time. That is coming through as well, with firms saying, logistics, infrastructure, sure, the broad trend is towards improvement, but in October specifically, that seemed to be particularly challenging. So I think these are just some of the issues that are coming through, Ray, in the feedback that we're getting from manufacturers.
Yeah, but are we scared? I mean, you spoke about tariffs and you spoke about what's going on. And there's been this whole thing about 30% tariffs and the United States saber rattling. Are people just hanging back and saying, we'll just see out the year, we're in November now, let's just wait and see because we don't know?
Look, there certainly is a huge amount of that we're seeing, Ray. Uncertainty just doesn't help, and we've had a lot of that this year since the introduction of not just the reciprocal 30% tariffs, but also the so-called Section 232 tariffs that have been imposed for the auto sector, for the steel sectors as well. It's generated a lot of uncertainty because one of the big problems right now is businesses saying, we just don't know what's going to happen. We've been told, of course, that the South African government is engaging with the U.S. to sort of come to some sort of trade deal. There's been indications that something might come through, but as we're having this conversation right now, there is no trade deal. So we don't know if we're going to get to a point where these tariffs are lowered or not, and that uncertainty very unhelpful for businesses. And I think there certainly is a huge amount of holding back, and I think we're not necessarily seeing that in the PMI data. I think we see that in the investment numbers, Ray. One of the things we've seen this year is that when you look at private sector investment in particular, it's certainly been underperforming. I think the uncertainty that you speak of certainly one of the big explanatory factors behind that.
Yeah. Having a look at it, though, I mean, if you look at new sales data as well, new sales is down. There's a general picture here as well. Yeah. Do we need to look at other markets? Do we need to have a look at Japan? Like Paul Mashatile went overseas. He had a look at Japan. We're looking at Europe as well. They're also suffering. In fact, I was looking at Ireland's version of the PMI. Exactly the same thing. They're down a whole 10 points. Are we not all in this together? And we should maybe say to each other, let's trade because this is not acceptable.
Yeah, it's a really good point. I think part of it is certainly due to sort of a more generalized slowdown in activity at a global level. But I think to your point, we shouldn't just say, look, the external environment is challenging. It is what it is. Let's leave it at that. I think there's also a question to be asked about, given the challenges that we're facing from a trade policy perspective in the U.S. right now, should we not be thinking about how to diversify opportunities for South African businesses, across other different markets? And of course, we have seen some activity in that space. There's been some announcements, of course, in the agri space, in China, etc. But I think we need to be seeing a lot more for that. And we also need to be talking about the Africa opportunity that exists as well. Ray, one of the things we've been talking about a lot in South Africa for what feels like a very long time right now is the Africa Free Continental Trade Area Agreement. How do we maximize the opportunity that presents? I think it's sort of beyond, of course, the fact that global activities does seem to be softening a little bit. I think there's also a policy discussion that needs to be had about how we maximize all available opportunity for South African businesses going forward.
Yeah. You see, you're quite right. We've also got the G20 coming up as well. Of course, US President Donald Trump's not going to be there, but maybe that's not a bad thing. Maybe it's time to take some of these opportunities. We had the B20 as well meeting, saying, right, let's build ourselves up. Perhaps this time next year, once we've got through the B20, the G20 meeting, perhaps this time next year, it's a totally different picture.
Yeah, that's certainly what we'd like to see. One of the things we've been highlighting, Ray, is that I think the G20 summit doesn't come at a particularly bad point for South Africa. And if you sort of think about where we're coming from over the last sort of 2 or 3 years. 3 years ago, we're at the height of our electricity crisis. Our logistics infrastructure is worsening. We can't seem to get any reform going anywhere. Fast forward to 2025, we seem to be on top of electricity supply issue, logistics infrastructure. I mean, as we're seeing, of course, in the results that we're discussing here, things tend to wobble around a little bit, but the broad trend is positive. You look at what Operation Vulindlela is doing. We're demonstrating that we can actually do reform. We've just been taken off the FATF grey list. I think there's a lot to point to as South Africa right now to demonstrate that, slowly but surely, I think, we're certainly making the environment of doing business a lot better. And I think it's important to highlight that opportunity to all of those businesses, to all of those leaders that will be here this month and try to see what sort of opportunities can come out of that for South Africa, right?
Yeah, we can only go up. We can only go up. Miyelani, thank you so much. Good to chat to you on Business Day TV. That was Miyelani Maluleke, Senior Economist at Absa.